COREWEAVE's IPO looks like a great money-making opportunity, but I'm going to be showing you why most investors will lose money on this trade. I'm sure you've heard that COREWEAVE is being backed by huge companies like BlackRock and Nvidia, but I'm going to be showing you why BlackRock, Nvidia, and even COREWEAVE really don't care too much about what happens to COREWEAVE's stock price on IPO, and I'm going to be starting by telling you the most important point, which is that COREWEAVE itself does not care about their share price after IPO. I think way too many people don't really know how an IPO truly works, so I'm going to be explaining it fast and simple. A company issues shares at a certain price to institutional investors to raise a certain amount of capital. These investors may even pay less than the IPO price because the price of the company's current valuation before IPO might be less than the valuation at IPO. And I'm going to be telling you exactly how much BlackRock and Nvidia paid per share later in this video. After these shares are sold, the company makes the money they desired, and they no longer really care about their own stock price since they already sold their shares. In fact, if a company IPOs and the price goes up, it's said to be a bad thing for the company because it means they could have sold their shares at IPO for more money. To add insult to injury, many insiders will only start buying a lot of their own stock after it crashes to get it at a better price, and the CEO or board members already own shares at an extremely low valuation, so they will most likely be up on their investment even if the stock burns 50% or more. Do not think that you are simply on Nvidia or BlackRock's level when you own shares of COREWEAVE, as their shares will always be purchased at a better deal than yours. This means that if you are buying COREWEAVE at IPO, you are truly getting the retail price, which is why many of us are referred to as retail investors, because we pay the highest price, don't get any bulk deals, and are generally not able to purchase shares before they hit the market. That being said, BlackRock and Nvidia most likely acquired the company at about a 35% lower valuation than is expected to IPO at. That means that these companies will likely be up on their position if the stock falls about 35%. And this is very important when we are deciding what strategy we should use to buy COREWEAVE. So what do we do during the COREWEAVE IPO? Well, here's what I think will happen. The stock will probably open post-IPO and get some sort of bump, most likely 10 to 30% in my opinion, and this is the safest time to exit. You may lose out on some potential profits if the momentum is strong, but I can't imagine it will be much. I think a lot of people will wait for proof of concept, meaning they will get in late and they will see their money rise a tiny bit and then fall and then crash. That being said, I think that COREWEAVE will eventually fall to around that negative 35% I was talking about when the hype dies out. I think potentially the Nvidia BlackRock price will be a strong point of resistance, but I think the stock will inevitably fall and potentially stay down until the next earnings report. This is a common pattern for IPOs, and this company is truly set up to make a similar move. However, because of COREWEAVE's potential in the growing AI industry, COREWEAVE may just have the potential to run a bit, but especially in this current market, I do not see this lasting long. If you would like updates on the best move during this IPO, subscribe, as I will be posting more important information and going out of my way to make sure we best profit on this trade. I truly hope I could have helped you out and wish you the best of luck on your trading journey. Have yourself a very nice day.